the buyer is not guaranteed that money when he makes a claim?
Yeah, of course.
Oh my God. We are here to answer one particular question most first time home buyers have, and that is about the mortgage insurance. Who should a buyer get the mortgage insurance from? Should they get it from the bank, or should they go through an insurance company? So, in order to answer that question, we have Mr. Dharpal Singh. He's a life insurance agent for last decade, and prior to that, he's been in the general insurance industry throughout his life. And who else to answer this question than himself? And on top of that, he's my father. So I guess he is the better person to answer this question. So let's ask him, which is better, bank or the insurance company? So, Dad, what do you think? Which is a better way to go, insurance company or the bank?
First of all, thanks for having me here today. So that's a great question. We will discuss today. There are main 5 points which we will touch today. So first is the portability. If you take the insurance through insurance company, the insurance coverage remains the same. In case you change the lender, the insurance coverage continues without interruption. Whereas if you take the insurance through the bank and you switch over the lender, you may have to reapply for the insurance, probably at a higher rate with the increased amount of premium. So the second main difference, the underwriting in the case of coverage of the insurance company is done at the initial stage when you apply. So that means you know fully well upfront that you are covered. Whereas in the case of bank, the underwriting is usually done at the time of claim, or sometimes the claims get denied for certain reasons, and when the beneficiary need the money most, it gets denied.
Oh wow! So you mean to say, let's say the buyer gets the coverage, buyer gets the mortgage insurance with the bank, but the buyer is not guaranteed that money when he makes a claim?
Yeah, of course.
Oh my God. Okay, so with the insurance company, that is a benefit. That is a major benefit actually. So let's say 4 years down into a 5-year term, there is a claim, right? If the buyer is with the bank, that will be a big surprise for the buyer. The bank might come out and say, "Oh, we cannot give you anything," right?
Yeah, of course.
Oh wow. Okay.
So the third main benefit having an insurance, that's the mortgage insurance through the insurance company, is that you choose the beneficiary, that's your family. So in case of any such eventuality, the family knows how best to use the money. Whereas in the case of the bank, the money goes to the bank. The beneficiary is the bank.
The bank is the beneficiary.
Yeah.
So let's say there is some money left over after paying the bank. Then the money will go to the person, right?
No, not exactly.
Not exactly. So how will that work?
So usually the remaining amount of the mortgage gets paid to the bank itself, because bank is the beneficiary.
Okay. So
Although the family may be in dire need of money at that stage, so that doesn't get paid like that. Whereas in the case of insurance company, the balance amount, whatever mortgage is there, the balance amount of mortgage gets paid. The balance amount gets paid to the family. So the fourth benefit of having the coverage through the insurance company is the level benefit. That's suppose the insurance is for 1 million, and the beneficiary in the case of claim gets full amount of 1 million. It doesn't decrease over a period of time. Whereas in the case of bank, as the mortgage gets paid down, the coverage decreases.
So the coverage amount decreases.
Coverage amount decreases, and although the premium doesn't change, premium remains the same.
So you mean that with the bank, let's say the mortgage was for $1 million,
Yeah.
and the buyer ends up paying down almost 500,000 out of it, right?
Yeah.
So in case of a claim, the buyer will only get 500,000. That's it.
That too will get paid to the
bank.
beneficiary. That's the bank.
That's the bank. Okay. Wow.
So the fifth main benefit is that the insurance company has many different kind of plans, so which can fit into one's insurance needs according to their affordability. So in case of bank, there is usually one kind, one plan fits all, like kind of thing.
So as a consumer, you don't have many choices.
No.
You get what you get from the bank.
Yeah.
So well, now you know that why is it beneficial to get the mortgage insurance through an insurance company instead of a bank? Of course, you spend your hard-earned money throughout your life, and to get a surprise of a kind when you need the money most, or when your family needs the money most, right? So that is something where you won't get surprises if you're with a mortgage insurance company. Instead, if you are going with a bank. So I guess this answers the question that everybody has, that who should they go with when choosing insurance provider. It's a bank or an insurance company. So I guess the insurance company wins here, right?
Yeah, of course. That's very true.
Well, that's great. Thanks for
Thank you so
answering my question. And we will be bringing Mr. Dhampal Singh to the podcast quite often, and we will be answering the questions that we get all the time about this industry and insurance in general too. And insurance and real estate kind of cross paths quite a few times, right? So stay tuned, and thank you, sir. Thanks for coming over and sharing your wisdom and knowledge about the insurance industry and about this particular subject. Thanks again.
Thank you so much. I look forward to that.
Thank you.
Next meeting.
All right. Have a great day. Thanks.
Thank you so much.